What if the US economy crashed tomorrow? Sounds dramatic, right? But let's look at what's really going on beneath the surface. Right now, despite the headlines about resilient markets, there's a quiet buildup of risk that most people just aren't talking about. The probability of a recession? It's hovering in the mid-30% range. That's not panic territory, but it's also not exactly a sigh of relief. Consumer confidence rebounded a bit in May, which sounds good, until you realize it's still fragile. The University of Michigan sentiment reading, just 50.8. That's one of the lowest numbers we've seen in 3 years. People are still nervous about where things are headed. Meanwhile, inflation is creeping up again, thanks in part to new tariffs. We're now flirting with a consumer price index between 2.5 and 2.9% annually. Not runaway inflation, but enough to make everyone a little uneasy. Now picture this chain reaction. Tariffs jack up prices, the Fed gets spooked and pauses rate cuts, and suddenly companies start laying people off. Sound far-fetched? It's not. Corporate debt defaults are rising, with US companies now owing a record 45% of GDP in bonds. If those companies start defaulting, markets could react violently. Remember that crash back in April? 10% drops in just a few days. And here's a big red flag. The yield curve is still inverted. Every single recession since 1970 has been preceded by this warning sign. So could the US economy collapse overnight? Honestly, unlikely. But with all these indicators flashing, tariffs, inflation, corporate debt, market swings, it's starting to feel a lot closer than it has in years. Stay informed, stay curious, and keep an eye on the data, because sometimes the signs are right there in front of us.